Well, good morning and welcome back to the BRN Sunday podcast. I'm Jeff Snyder, founder of the Morning Pulse and the lead anchor for the Broadcast Retirement Network. So glad you're back. So glad you found us. If you're new, we've got another great show. Our contributors are chomping at the bit to break down and analyze the news in retirement, markets, technology, personal finance, and so much more. So sit back and relax for this episode of BRN Sunday. Well, folks, we're going to kick things off, as we always do, with a look at social media. And joining me on the line, he is the Senior Financial Services Editor for LinkedIn, Mr. Devin Banerjee. Hey, Devin, how are you?
I'm doing pretty well, Jeff. How are you?
I'm doing well. I know you traveled across country this week, so I hope you're recovering from your trip.
Yeah, thanks a lot. It was another productive week in New York, doing some brainstorming with my team and planning for 2020, but also some interesting interviews I did that I'll be featuring on LinkedIn in the coming weeks.
Oh, very exciting. So, in all the threads that you're monitoring, whether it's finance or healthcare technology, what's been top of mind this week for you and the team at LinkedIn?
Yeah, some of the really interesting conversations we featured and got a lot of pickup this week. The first is one we call the Bank of Mom and Dad. It's an analysis by Pew of young workers increasingly leaning on their parents to cover some of their costs, like housing costs or even household expenses or tuition and student loan repayment, for example. So, what Pew found, which is really interesting, is that most people in America actually believe that that young adults at around the age of 22 should be financially independent. So 64% of adults believe that should be the case. Now, in reality, only about 24% of young adults at age 22 or younger are financially independent. So, and that's actually down from about 32% of those young adults who were financially independent in 1980. So this is quite a significant step down in the sort of financial health of young people here in America. About 59% of parents of people 18 to 29 years old said they provided at least some financial help in the past year. So things are trending in a bit of the opposite direction than what you would hope. A lot of it driven by topics we've talked a lot about, Jeff, over the past year or two. Things like the ballooning student loan debt outstanding here in the U.S. A lot of young people are struggling with that burden, but also just the kind of unbalanced recovery, economic recovery, where high-paying jobs are going. They're going only to a certain small subset of industries and roles and job functions. And so a lot, when you average all this stuff out, a lot of young people, effectively the takeaway is they are struggling more than in previous generations.
Yeah, certainly not a good sign. Not a good sign when we're advocating for people to save. You can't save if you don't have money. And it's not good for parents in the sense that if they're taking away from their incomes and their ability to save, are they going to be prepared for retirement? So right. a lot to be said in those numbers, and I'm sure the Pew people who wrote the report probably have done in-depth analysis, and there's probably a lot more there.
Yeah, absolutely. And there are some voices that Pew picked out from its phone survey, and some of them actually are talking about exactly what you just said. I'm looking at one right now, which is that adults are even not, on average, in as good a financial situation as they were a couple generations ago. A lot of them have not saved enough for retirement and have their own stresses financially, and now a lot of their children need support as well. So, which is so interesting. I just want to take a second, which is so interesting when you read the headlines, which I do all day, about how, stock market today, we're recording on Friday, at an all-time high,
yep.
or very, very close to it. And the economy is booming and unemployment is low. And it just goes to show that things are so skewed. And when you go to the means and the medians, things are not so rosy. So anyway, sorry to be a bit pessimistic, but that is what we're seeing emerge from the conversation on the platform. And a related conversation we featured this past week is about that predominantly millennial lifestyle of relying on some of these new companies, most of them tech companies or tech-enabled companies like Uber, like Lyft or WeWork or DoorDash or Postmates or the Casper mattresses. And these are all companies, if you think about it, that are really money-losing companies being subsidized effectively by all of their private funding and venture capitalist investors. And, prices are kept low because these companies are trying to just acquire customers and users as fast as possible. And even that lifestyle could be coming to an end. So we've seen in the past few months people kind of getting religion, especially investors and the public market when some of these companies go to raise funding there. People are getting religion that these companies are actually not so sustainable. And what that means going forward is that lifestyle of a lot of young people relying on these companies may not be sustainable as well. Yeah. And just one interesting thing that emerged from that conversation we featured is some traditional small business owners coming out on LinkedIn, on the platform, saying, yes, we've been saying this for a long time, that, and I'll just read an excerpt from one. Jenna Huntsberger, a small business owner, said, my small business colleagues and I are looking at our P&Ls every day, looking at our incomes, at our profit and loss, our income statement, our balance sheet every day, trying to make the margins work, while these other companies are playing by a completely different set of rules. So this potential awareness of these companies and their money-losing quality has effects for their users, has effects for their private investors, and also some other small business owners who have had to compete with them over time.
Yeah, I think. Do you think that the pendulum is starting to swing back towards the middle, or are we still going to see these big, IPOs for Uber, Lyft, in the future, where people are just going to be throwing money? Because I think I've heard you made a point, I think it was you, and I don't want to attribute something that's not correct, but that, venture capital, private equity, that's where money is flowing from a lot of these larger asset pools. So they're flush with cash. So what do you do with cash? You got to invest it somewhere. But do you see this?
That has driven a lot of the money flow into these companies that become unicorns, even when they lose so much money. It's just, we're seeing this with WeWork right now. I'm getting so many questions from my friends and people saying, what does a valuation even mean when it's gone from 47 billion 6 months ago to 8 now? And it's exactly what you said. The money, the asset owners have to invest somewhere. They're looking for return in this low interest rate environment. It's going into the private markets, venture capital funds, private equity funds. Those money managers have to deploy that somewhere. And there's an interesting article actually from a couple of weeks ago that I'll send and you can showcase to our listeners and readers in the New York Times by Aaron Griffith. It was on October 8th, and the headline is Silicon Valley is trying out a new mantra, make a profit. And I hear this here in Silicon Valley where I live all the time, that people are directing their investment teams to really home in on those unit economics, that every customer or user or every product or service is profitable within these startups and these companies. Now, obviously, a lot of companies can't achieve that for a while, but they're on a trajectory to. So there's just a lot more focus on that. There's definitely been a mindset shift, I would say.
Yeah, absolutely. Well, Devin, always a pleasure talking with you, and I look forward to seeing you on the network on Monday for Social Media Monday. You take care. Have a great weekend, and we will see you soon.
Yeah. Sounds good, Jeff. Take care. Bye.
Welcome back, everyone. And now it's time to shift gears, talk a little technology. And who else to talk about technology and more? Daniel Klein, Senior Technology and Consumer Products Reporter with The Motley Fool. Good morning, Daniel. How are you?
Hey, Jeff. How are you?
I'm doing quite well. A little technologically challenged, but aren't we all sometimes?
We've had some problems today, but it happens.
It does happen. So a lot going on in the technology world, and appreciated, before I even begin, appreciated having you on the network as always, and you'll be coming up on Tuesday. But lots going on in the technology world. What's top of mind for you and the folks at The Fool?
Well, to quote Chicken Little, the sky is falling.
Woo, the sky is falling.
So Amazon reported earnings, and I've talked about this before. Amazon is a long-range company. If you're buying Amazon shares, you're doing it to hold them for years and years. So you shouldn't consider quarterly earnings on a standalone basis. But
Yeah.
of course, many investors don't operate that way. And what happened is Amazon reported, and when they were still solidly profitable, numbers came in well below what was expected, partially because instead of spending about 800 million to offer one-day delivery, they spent 1.5 billion. Now, that's a little bit scary, but you have to look at what Amazon is doing. They're building up a back office and infrastructure capacity to deliver to you in one day. And I've noticed this as a frequent Amazon shopper, that I used to get Amazon orders from the Postal Service or sometimes UPS. Now I get one-day Amazon deliveries much earlier in the morning from an Amazon truck. So clearly they're spending, and the spending is working. And the only thing you should really doubt as an investor is not how much they're spending, it's whether consumers actually care about this. And the reality is that probably won't matter because everyone is following Amazon, so you have to have it. You have to have one-day delivery, and Amazon is spending money now to be better in the future, which has been the company's model from day one.
Yeah, I mean, you can't, past is not always prologue, but it can be prologue, and I agree. Looking at earnings in the short run, is that really a trend just in the short run? I mean, there's a lot of things going on with Amazon. How do you think Amazon? I was reading something online about Amazon in particular. How do you think this next holiday season, not new, next holiday season will be for Amazon and similar companies?
So I think this is going to be another rich get richer holiday season. Amazon, Walmart, Target. Walmart has already kicked off its holiday specials. Target starts theirs November 1st. Mm-hmm. So we are not even at Halloween. In fact, I have not even purchased Halloween candy, and it is already the Black Friday shopping season. Go crazy, buy a 60-inch television. But as consumers, all of the big players have made it easier to shop however we want. We've talked about omni-channel many, many times.
Yep.
But my ability to sit on my couch and look at Target, Amazon, Walmart, Best Buy, buy something or make a list of things I'm going to go look at in the store, because sometimes with the television, I might do my research on the phone or the computer, go physically look at it in the store to make sure it's as cool and as thin as I hope it would be, maybe do a little price research, and then order it for delivery because I don't have a vehicle that can fit a large television in it. Those companies have invested in buy online, pick it up in store, buy in store, have delivered, all sorts of different methods. And those are the companies that are going to do the best. You are not going to get a miracle turnaround for Sears or JCPenney. And, there's some companies on the fence. Macy's will probably do okay, but it's really hard to know.
Yeah. Again, you cannot look at just one quarter and knowing the expenses and all these things that are going on with trying to improve a company. I personally don't think it's going to indicate, it's not indicative of things in the future. One thing I want to ask you before we shift gears is Amazon, Google, Facebook, a lot of politicians are calling for antitrust. I was going to ask you about this. I read an article this week about antitrust around some of these big tech companies and breaking them up. I mean, isn't this just a natural order of things economically? This is not an AT&T or the Bell Company. Remember the Bell Companies? That's the one I can think of.
I do. So I'm generally against government involvement in business, but I do think some of these companies, Facebook most notably, needs to do better. If you look at Facebook, they do not take down ads that are proven to be fraudulent. And this has led to, you could argue, the current president. So, and I don't want to get political here, but there are candidates, I believe Elizabeth Warren has done this, who have intentionally run ridiculously fake ads to demonstrate that Facebook isn't policing this. I think the same thing is true of Twitter, where they're allowing posts by people of a certain level of fame to not apply to their policy. That's certainly true with the president. So you have to have policies. You have to enforce them. I am less concerned about Google. The search results generally favor the most legitimate news story. One of the things every news organization is working on is how to rank in Google. And you generally rank when you have quality content that people are referring to. So yes, that that means that far left, far right blogs pushing extremist views are not going to rank well because they're not super credible. They're not getting linked a lot. They're not quotable. So I would like to see better enforcement. I would like to see, maybe industry-wide oversight, the equivalent of like an OSHA, where the industry writes its own standards, but actually has standards and has a means to enforce them, and there's some legal recourse. But I don't want to see the government coming in and telling Facebook how to run its business, because frankly, very few people in Congress even know how an iPhone works, let alone have the ability to regulate these industries.
Good point. So let's shift gears. We were talking about Facebook, and it seems like Facebook has its own news organization in an attempt to battle some of the beating it's been taking since 2016 on the misinformation. What can you tell us about that?
Yeah, so it's rolling out slowly, and I don't actually have it yet, but Facebook has started adding a news tab to its app and its website. And in that tab, you'll be able to see news from well-known, credible publishers who are getting paid for their content to be there. Mm-hmm. I don't know who all the partners are going to be, but think all your big news sources: Associated Press, Reuters, Bloomberg, New York Times, Wall Street Journal, Boston Globe, that level of provider. And I assume it will eventually leak down into other fields where you'll see financial providers like Motley Fool or entertainment providers like Entertainment Weekly. And this is going to give you a curated, credible news field. You won't have to just say, geesh, I see a story popping up in my stream that a friend of mine posted, but I have never heard of that news organization, and I don't know if eating kale will cause me to be able to fly, or that 3 cups of coffee a day is good for you on one hand or will kill you on the other. This is going to give some added credibility, and in theory, it will bring some revenue to publishers. The caveat is a lot of people have tried this. There have been all sorts of different, Apple News does it, Microsoft does it, and exactly how much demand there is for this on Facebook, yet to be seen, but I do consider it a positive.
Yeah, I mean, certainly having a reputable source for news is important. And I know that I go to multiple sources, and I aggregate the news every day. And when I choose news, I make sure that the source is reputable. You can't read an article. You can read an article and see and think that there's bias involved, but you'll never know in someone's heart whether there's bias, whether that's bias from the New York Times. I think me personally, I think this is like Facebook's way of saying, okay, well, we're going to drag in everybody else. If we're going to be considered a disinformation or misinformation organization, then we're going to drag in and use all these other organizations' content and protect ourselves in a way.
So I'll take a little umbrage to this overall concept of media bias, because it's generally considered that the media is left-wing. I worked at the Boston Globe. I was in the business section meetings every day for the Boston Globe. And I will agree that myself and many of the reporters in that room had personal liberal tendencies. But what I can tell you is every person in that room was an attack dog looking to get to the truth. And while they might not be quite as happy taking down someone who's a liberal icon as opposed to someone who's more right-leaning, if there is a hint of impropriety, those reporters were going to go after it. And when you talk about bias, the reason we know about the Bill Clinton, the Hillary Clinton, all of the left-wing legitimate things that were investigated is because the, quote, liberal media broke them, and is sometimes, frankly, too fair in reporting things that are ridiculous, like giving air to the birtherism things. So yes, this is Facebook giving itself cover, but anyone who is reading news stories from legitimate news outlets has to understand that most reporters take the job of getting the truth out there very, very seriously.
Yeah, absolutely. And I wasn't necessarily, I'm just, trying to get the other side of the
argument. I know
know
you weren't going there,
yeah.
But I do feel like the audience goes there, and Facebook has been a big place for that.
Yeah.
And you are going to get people who look at whoever Facebook chose for this, whoever opted into this, and they're going to go, well, how come this thing that I read isn't there? And the answer may very well be because that thing doesn't pass the bias check.
Yeah, or it doesn't. Right, and I think just to kind of come back to BRN and the Broadcast Retirement Network for a second, we want to make sure that we have a solid editorial process. So editorial boards matter, right? Who's on the editorial board, what they're sourcing, the sourcing matters, and then how people write and find content or information, and I think that's important. So this is really, I think it's really interesting. But my personal read on Facebook doing this is it's just like almost like an insurance policy. And you're right, Apple News. I don't know how successful or unsuccessful that's been, but I don't use it. Do a lot of people use it? I don't know. What someone? There's so much out there that you can see, the legitimate sources that you can see. I kind of know where I want to go and what I want to. What's important to me for that moment. I don't necessarily need somebody to tell me what's important for me to think about. That's just my personal taste.
Yeah, I have to be honest. I scroll through Facebook and I'll see stories, and if it's a silly story like this dog has adopted this pigeon, or like something,
That's cute.
So I don't care where it comes from because it doesn't actually matter if it's true. It's just heartwarming, and it's not going to change my life if it's a photoshopped image.
Right.
On the other hand, if I see a health story or a political story, and I might then Google that topic to see, because sometimes you see something that doesn't seem credible, and then you Google it and you go, oh, wow, CNN has this story. The New York Times has this story. But as a person reading anything, you should be skeptical of source. That doesn't mean there aren't some wonderful sources. If you're not a business writer, you may not know what Quartz is. Well, Quartz is a very credible business publication. It's just not a name the average person might notice in their Facebook feed. Yeah. So, frankly, you might not know who the Motley Fool is, and our name is a little silly, so that might lead it to not seeming credible. The other thing you also need to understand when you look at anything is the difference between a news report, an opinion report, and an analysis. A lot of what I write for Motley Fool has news at the top and then sort of my analysis in the middle and the end. Not fully opinion, it's hanging on some kernel of news that's sourced and credited, but I am coming into the picture sort of using a voice of God explainer. So you need to sort of know what you're consuming and understand sort of the organization and what they're pushing. A lot of places will label opinion. Sometimes they won't. Sometimes they'll just put the person's face there, which makes it clear to some people it's an opinion column. You have to sort of figure out the tone and know what you're looking and check. You wouldn't go to one doctor and the doctor tells you have 3 weeks to live. Please don't go to any other doctors. Like, of course, you'll go see a second doctor.
Yeah, absolutely. I think I always consider the sources. I look at, is it sponsored by anybody in particular? Because that sometimes passes as news, right? There, if you look at certain organizations, you can definitely see sponsored content, which definitely has a bias to it because it's sponsored, and you can see like what I consider to be real content. Well,
yeah, and I'll give you one last thing.
Yep.
Consider the source of data. So I deal with a lot of surveys, and some of them are very credible, but the people who commission them have a bias.
Yeah.
So a mattress company might have a credible third-party survey company ask people if they're getting enough sleep. And I might write about that, but I will explain where the question originated, what their bias is, but also that they didn't conduct the survey. A third party did, and these are the results.
Right.
But I probably wouldn't run a survey conducted by a mattress company whose finding is you need to buy a new mattress from Sleepco or whatever it is. You have to sort of be credible as a news person, but also as a consumer, realize that sample size matters. A survey of 300 people that's broken down into generations isn't all that valuable.
No, absolutely not. Well, Daniel, we went from all over the place. We talked Amazon, Facebook, and then journalism and news ethics. So I appreciate that. You have a great rest of the weekend and great rest of the week, and we'll see you on the network on Tuesday.
Thanks, Jeff. I appreciate it.
Bye-bye. Welcome back. Now time to shift gears to a little markets action and maybe more. Joining me on the phone from Delphi Digital, he's a co-founder there, Mr. Kevin Kelly. Hi, Kev. How are you?
Doing great, Jeff. How about yourself?
I'm doing well. It's been a busy week, but a good week. The weather's certainly changing here in the Northeast, as you know, and getting a little cooler.
Yeah, I'm hoping I think this weekend's going to be like mid-60s, so hoping to take advantage of it one last time.
Yeah, absolutely. So what's been top of mind this week for you? I want to talk markets, and we can talk crypto. So what's top of mind? I know a lot going on in the market.
Yeah, a ton going on per usual. I mean, today's big news is you've got the S&P 500, so U.S. equities, basically teetering on all-time highs, literally sitting right at the highs that they made back towards the end of July. And a number of kind of catalysts for that. I mean, you started to see an improvement within the discussions or progress on trade war between the U.S. and China. You had the Trump administration coming out this morning saying that talks today with the Chinese representatives at least seemingly are going better than expected. And this kind of plays into, the phase one of the, I guess you'd say, trade agreement, for lack of a better word, that's been going on, which basically is by no means, a full-blown trade agreement, but it kind of starts to scale back some of the tariffs that we've issued, on Chinese goods in return for in return for China buying more agricultural products. So again, it's kind of a step in the right direction, but certainly not, a huge game changer unless we keep up that momentum towards getting, a larger kind of trade agreement between the world's two largest economies. But aside from that, I mean, you've also had some pretty good earnings, especially this week today with some of the big tech names coming out and whether increasing their guidance or, quite frankly, reporting numbers that aren't as bad as a lot of analysts expected, because we talked, before earnings season a few weeks ago kicked off, how analysts had been kind of basically slicing a lot of their profit targets for, U.S. equities and U.S. stocks, just based on a number of the things that we keep hitting on in terms of slowing global growth. The outlook for growth was just kind of deteriorating. So I think the low bar that analysts set before this earnings season is also part of the catalyst, right? It's kind of a fun little game that analysts like to play as we kind of head into earnings season. That way it makes, companies more likely to beat projections. And then you see, rallies like you're seeing today. So, no, I mean, definitely really interesting and certainly a bit of a shift over the last few weeks in terms of just kind of general market sentiment and, the expectations that maybe things aren't nearly as bad as a lot of people expected a couple months ago.
Yeah, it's should I be singing "Happy Days Are Here Again"?
Maybe a little bit too early for that, but let's see if we can get the market up to an all-time high and sustain those levels for a couple of weeks. But I mean, we're certainly heading in the right direction.
It's interesting, and I try my very best not to tune in to the news every day because I don't want to go through those emotional ups and downs. But listening, last week we talked to Oliver. I think you were off on assignment or had a meeting. And, there's some things, there were some positive indications and some negative. And this week it just sounds, I can hear it in your voice. And you're always a very positive person by nature. But, things, definitely some positive things in terms of the trade news. The market at all-time highs. Looks like consumers are, and all this is good news going into a holiday season. That should certainly help retailers. I guess you just never know, and we always, we can beat this till with a dead horse. We just never know what's around the corner that could spark a sell-off.
Yeah, no, 100%. And again, that's why, might be too early to start saying happy days because you never know, especially with what happened, this time kind of heading into the holiday season last year. I think, certainly a little bit more optimistic about the market now than a few weeks ago. And it's also in part, Oliver and I have been going back and forth and talking a lot about this kind of more publicly recently about how the general market consensus about, again, slowing global growth and just, kind of the world going to hell in a handbasket was just so strong, really kind of peaking, you could say probably about a month ago, that we started to question, okay, what happens if, things are certainly, heading in that direction, but what if, the degree or the pace at which, things are slowing aren't necessarily as fast or as drastic as a lot of people think. And so we're starting to actually kind of see that call and that play, or I should say that call play out here a bit. But I do think, you bring up a really good point heading into this holiday season. One of the things that we looked at in one of our recent reports was just talking about how, the sell-off, the really, really drastic kind of correction and sell-off in the stock market, right around the holidays last year actually did show up in the Q4 and December retail sales data right around that holiday season. So, you do have a lot of people out there who certainly have a lot of money in the market. And so just kind of the wealth effect, nature of a stock market sell-off and watching, whether it's your 401k or your retirement savings, decline by, even if it's something as I won't say insignificant, but as small as, 4, maybe 5%. In that short of a time period, I mean, it's certainly can dent consumer confidence. And you saw that actually show up in the hard numbers as well last year.
Yeah. I want you to shift gears, put your, one of the great things about having you and Oliver on is you guys are really diverse in terms of you're like Swiss Army knives, if I can even say that. Hopefully I don't offend anybody. because knife and anyway. But you have the ability to go in different directions, which makes you really great for an audience to listen to. So let's shift gears. Kind of, you set up the macro really well. Let's talk about cryptocurrency, because crypto, we've had some sell-offs and buy-ins again. So what's going on there in the crypto world?
Yeah, another week, another volatile week for crypto. You saw, Bitcoin. We talked about this, I think, a couple weeks ago. Had sold off towards the end of September, and really the rest of the crypto market pretty much follows Bitcoin at this point too. Mm-hmm. So you had a pretty significant sell-off at the end of September, and then it was kind of trading sideways for a lot of the last few weeks, and then middle of this week, really Wednesday, you saw another drastic sell-off. Not nearly the extreme of late September, but you saw Bitcoin drop another $600 within a matter of literally an hour. And so it started to raise some concerns that, maybe it might be falling through some key technical levels. I mean, we looked at it much more as a technical sell-off because you had some leverage positions that ended up getting stomped out. And so a lot of times you see these kind of really, really quick moves in Bitcoin. It's usually something that's more technical, not necessarily fundamental driven. Mm-hmm. And then you saw the exact kind of flip today where you had a bit of a short squeeze where Bitcoin jumped up, $500-$600 within a matter of minutes because you saw a lot of these shorts get squeezed out, in a very short period of time. So it's been a volatile week. I mean, nothing fundamentally has really changed. I mean, I think if anything, honestly, the fact, and we've been kind of hitting on this theme a lot more recently, that, the next leg higher for Bitcoin and kind of crypto, I really think that the best environment just historically, and again, the history is rather limited, but historically Bitcoin and crypto has really performed a lot better during periods of kind of declining equity market volatility, when people aren't nearly as kind of on edge, when stocks are actually outperforming. So you kind of have this risk on environment because again, it's still very much viewed as, a risk asset, an emerging asset class. And so, if the world does go to hell in a handbasket, or you see these massive, stock market sell-offs like we saw last year around this time, crypto tends to follow that as well, because again, just from the investor perspective right now, it's still a very speculative asset class. There's a lot, and by nature, there's a lot of speculators in it. And so, you typically tend to see it kind of follow these risk on or risk off moves, for longer term trend analysis. So we're kind of looking at the stock market potentially breaking into new highs, actually being a potential catalyst for higher Bitcoin prices here in the near future.
And from what I'm reading, Kevin, some of the central banks around the world are warming to digital assets. I mean, I'm seeing things from like the ECB, even the Federal Reserve. They're warming to this.
Yeah, they're certainly. I wouldn't necessarily say they're warming up to, your true kind of non-sovereign, decentralized crypto assets like Bitcoin, but they are starting to accelerate, I think, the research and exploration efforts around things like central bank digital currencies, like we talked about, which are basically kind of digital forms of, your fiat currencies today. So a digital dollar, a digital Chinese yuan, things of that nature. I do think that central banks are starting now to really recognize the fact that the movement of not only just crypto assets, but just kind of digital assets is one that, is going to take place with or without them. And so now you kind of have this race to see who can digitize their currencies, fastest almost, because if you think about how integrated global trade and commerce is today, if you're able to, reduce the frictions of using your currency, especially in global trade, that certainly can have a lot of benefits for, the U.S. dollar, for example, holding its or maintaining its status as a global reserve currency. So, you're definitely seeing, leaders and policymakers start to warm up to those ideas, but they're still very skeptical about things, especially things like Libra or anything that kind of challenges the sovereignty of their control over, their fiat currencies.
Yeah, I was going to pivot to that and Libra, because I think Mark Zuckerberg, didn't he testify or speak in front of either the House or Senate Finance Committee, one of the committees?
Yeah, he did. Yep. He testified in front of Congress earlier this week. And to be honest, I listened through the entire thing, kind of in bits and pieces. At one point, actually, admittedly kind of turned it off because there was just, I just feel like there's a very, very large disconnect, and it really shows time and time again when you see a lot of tech leaders testify in front of Congress. But there were just a lot of things in terms of the line of questioning I thought was off. And I just still think that U.S. policymakers really are kind of missing what the potential benefits of Libra could be to something like, the status of the U.S. dollar as a global reserve currency. And it's ironic that they're kind of out on the forefront, really kind of putting the brakes or kind of hampering some of the innovation surrounding it. So, I mean, it's too early to tell what's going to happen. You've seen some of the larger kind of partners of the Libra Association drop out already, really due to regulatory scrutiny for it's probably the top catalyst or reason why they did that. So, you still have 20 or 21 partners that are part of it, that plan on, going through with it and developing it. But, I definitely think it's going to be a hot topic of discussion for the next, at least six to 12 months.
Yeah. Well, it's always odd watching the testimony, because when you know that members of Congress may not necessarily know how to turn on their phones or use some of their devices, they might get a little confused by the technology. But be that as it may, Kevin, always a pleasure talking with you. Thanks for the wonderful insight. And we'll see you later this week coming up on the network, right? We're going to be talking a little crypto.
Absolutely. Excited to do it.
Absolutely. Well, you have a great, wonderful weekend, and we will talk to you soon, my friend.
You too, Jeff. Appreciate it.
Welcome back. Now it's time for a look at healthcare, and who better to talk about healthcare and what's going on in that space than Lydia Ramsey. She's a correspondent and senior healthcare reporter with Business Insider, and she is also the author of the weekly newsletter Dispensed, where she she and her team take on all the big issues in biotech, etc. Hey, Lydia, how are you?
Hey, I'm good. How are you?
I'm doing fine. Did I do a good job introing Dispensed? Did I get that right?
Yeah, definitely.
Yeah, it comes out every Friday, if I'm not mistaken. I'm actually looking at it. I'm looking at it now, actually. So it's a lot of work. How long does it take you to put that together?
Not too long. If I can get myself focused, probably I'd get a half hour, but it's kind of a fun way to kind of process everything that's going on this week.
Yeah, awesome. So what can you tell us? What's top of mind for you and the team at BI this week? I mean, healthcare is an important topic in America. What's top of mind for you guys?
Sure. So this week has been really interesting as you kind of look at the biotech space. I think one of the biggest headlines coming out of this week was on Tuesday, Biogen and their partner Eisai really reversed a major decision to stop. Right. In March, they decided to stop running a trial related to a late stage Alzheimer's drug that they were working on. And this week they said, oh, look, we looked back at the data. Actually, there is some sign that this is doing what we think it's supposed to do in terms of slowing the rate of cognitive decline in people with Alzheimer's, and actually decided that in working with the FDA that they're planning to put it in front of the FDA in 2020. So that's massive. Like, if this gets approved, it would be the first new drug since 2003 for Alzheimer's.
And this is, they're continuing to diagnose this awful disease. Many families are inflicted, have a loved one or someone within their family that are impacted, and having a new drug that actually can do some benefit would probably bring some, alleviate some of that stress and pain, I would imagine, to these families. So good work getting that. It can't come soon enough, I guess.
Yeah, and well, here's hoping it does. There's still a lot that could go wrong between now and then. They could keep looking through the numbers and realize, actually, we shouldn't do this. It comes with a lot of caveats here, right? Like, if it was a surefire hit, we would have, not had that whole, let's shut it down back in March. So there's a lot of room for error, and it's also really tricky when we're thinking about these drugs. We've come a long way and kind of trying to figure out how the brain works, but we still really don't know what's going on and what's driving Alzheimer's. And until we do, it's really hard to find drugs that are going to really have an impact. So this one in particular, is focused on slowing the rate of cognitive decline. And they are seeing some signals there, which is interesting. But again, that's not saying, oh, this is going to reverse the disease or
right.
Even have some kind of curative benefit. So there's still a lot to be done. So it'll be interesting to see what comes next.
Yeah, I mean, I guess just being able to mitigate or slow down probably would benefit some people. But you're right. I mean, and for the Federal Food and Drug Administration, I can't even get it out, but the Food and Drug Administration, I mean, it's a balancing act, right? I mean, you're never going to have 100% perfection with a drug, but you've got to judge whether or not it's worth the risk that side effects could have or something not work, and you always want to set the right expectations if you're the doctor or the attending physician, to make sure it's hey, this has worked in some trials, it hasn't worked in other trials, but we've gotten approval to do it, and it's a real laborious process to go through the FDA approval process.
It is, yeah. So here's hoping their heads are in the right spot and they're not just looking for the emotional appeal of this would be the first new drug in almost 2 decades, things like that. So we'll have to see what happens in 2020.
Yeah, absolutely. What else was top of mind this week for you and the team?
Yeah, I guess even looking back to last week too, I'd include that as well. One of the interesting things that I'm tracking these days is kind of this big interest in the world of primary care, of startups like One Medical and some of the folks focused on the Medicare Advantage space. That's things like Oak Street or Iora Health. These kind of models that are kind of different from the traditional primary care doctor experience. You go in and see your doctor. This has like tech built around it and things like that. It's going to be really interesting. One Medical is gearing up for an IPO. They hired out bankers. They're getting ready to do that probably in 2020. And it'll be really interesting from where I sit and what I'm covering to really understand what the public markets think of a company like One Medical, because, there's not really a huge precedent for publicly traded primary care companies. And what does that look like? Do you value it like a tech company? Do you value it like a provider network practice? Or, and that those tend to be in the private equity realm. So it would be really interesting to kind of follow that over the next couple of weeks to see what kind of shakes out.
Yeah, I wonder how many people come out of medical school saying, I want to be a primary care physician. I mean, the stories that I've said and seen, I've seen, have talked about the extensive costs to come out of a premier or even just regular medical school. You're looking at $200,000 of student debt. I just think that, being a primary care physician probably doesn't sound like it's as lucrative as it used to be. And most people are probably taking on specialist roles. They want to be, eye care or foot care or whatever. I mean, it's really interesting to see how that business model could work and how they can make it cost efficient, but also, attract doctors to continue to work there.
Right. Yeah, it's a tricky balancing act, and it is interesting. You do hear of people feeling the pressure to not pick primary care and to pick specialties for economic reasons. But then I've heard of a lot of instances in which people came back to primary care. They realized that's actually where they want to be, and if they can make it work through some of these newer models, that's a good place to be.
Yeah, absolutely. Lydia, I want to ask you about a story that we did on the network a couple of weeks ago, and I think you probably know about this and can shed some insight about rural medical deserts where doctors are not as numerous outside of the city. And so people who live in more rural America don't have access to as many specialists or as many doctors. I think it's like, instead of having one doctor for every 1,000 person, I'm just making that number up. Now it's, one doctor for every 10,000 person, and they're covering a greater expanse of geography. Have you heard of such a thing in terms of medical coverage?
Yeah. That's a huge problem, especially as we look at, there's lots of, I think it's 1 in 5 hospitals on the brink of closing, and what could that do to different communities? It's really interesting to see that, and I'm going to be curious to watch as, telemedicine becomes something that more people are comfortable with and have access to. I'm going to be really interested to see if that has an impact on those kind of deserts and what that could be.
Yeah, and I'm sorry, I didn't mean to interrupt you. And also, you have talked about in the past with like the Walmarts and the not only the telemedicine, which is very big, and the online medicine, but also, where the Walmarts are, if they have a healthcare clinic or a Target or Walgreens, people can walk in, because those exist in smaller town America, and they exist out there. So I wonder if that's an area that can be helpful in improving Americans' healthcare conditions.
Definitely, yeah. I think you see a lot of these retailers kind of say as much. When Walmart opened its retail clinic in Dallas, Georgia, they said, they kind of pointed to the fact that they want to be the predominant healthcare provider in the space. And obviously there is some care still there, but they're certainly looking to fill a gap and fill a need that isn't there. The question will be, of course, like, can they do it in a way that works, in a way that, doctors on their own couldn't do? Because, it's still expensive to operate these retail clinics, and it's still expensive to do this. So they'll have to find a model that works and is sustainable, even if populations are smaller.
Yeah, absolutely. Well, lots going on in the healthcare arena. I don't know how you keep it all in mind, but you guys have a great team over at Business Insider, and it's a great piece that you can folks can subscribe to get all the latest healthcare news out of Business Insider. I'll post a link to it online. Lydia, always great chatting with you. Appreciate your insight, and have a great weekend.
Absolutely, you too.
Thanks. Bye-bye. Welcome back, and now we're going to change gears, talk a little financial literacy, and who better to talk to us about that than Rebecca Maxey. She's the Executive Director of the University of Chicago and Magnetar Capital FinEdge Initiative. Did I get that right, Rebecca?
Yes, we actually call the course FinEdge. So that's the new name for the high school course, yeah.
Oh, okay. Well, then I kind of got it right. But anyway, it's great to talk to you again. I'm working on it. I'm not a professional host. I guess I am now, but I'm not really. Great to talk with you, and so glad you could join us. How are things going in Chicago?
It's been an interesting week. We've got kids out of school, and it's a little, we've got teachers striking, so it's been interesting in Chicago.
Oh, okay. So there must be something going on with like benefits and contracts and stuff. Okay. Well, that aside, how are things going in terms of the financial literacy world? I know you and the team, when we last spoke, you were continuing to refine your techniques, refine and develop new techniques to reach people. How's everything going with you guys?
It's going well. We're just everyone's sort of surfacing from a project we just finished. So we created an online course that we're piloting with small and medium-sized businesses, and we're gonna look and see. It's a real interactive, reflective style course, and we're gonna pilot this and see what the results are. So we're really excited.
So is this something that you're taking what you learned when developing FinEdge, and now you're saying, hey, this works with kids and teachers in the education sector. Now let's see how it can be applied to small businesses. Is that what you're trying to do here?
Yes, right. So we took much of the course that we had designed for teachers to provide them with the information about the content because they really need that information in order to be able to teach the course. And so trying to figure out how can this apply to sort of the general population. And so we've adapted the course, and we're going to, it's 6 hours, it's 6 different modules. It really provides, adults with just a general foundation in, financial decision making, and really provides them with a process and a basic understanding. So this isn't, the quick fix, I've got credit card debt, how do I get out?
Right.
Because we just don't, that's not going to, in the long term, it's not going to help them, with every decision. So this isn't a 30-second soundbite type video.
Yeah.
So it's just providing them with more of a foundation.
And you're going to pilot this, you said, with some smaller businesses. Are these smaller organizations in and around the Chicago area? Are you looking nationally? How did you identify this test group?
Yeah, so we're actually partnering with the U.S. Chamber of Commerce Foundation, and so they're local Chicagoland, businesses, and we chose the small and medium size because they tend to not have access to these types of adult financial wellness resources. So we're seeing that, that's definitely a trend across the country that more companies are providing this as a benefit, and so we'd like to share our knowledge and what we learned and see if we can help out in that area as well.
Well, I think there's no doubt that you will help, and you've been successful over here in education with these students and with these teachers, getting them up and running. There's no doubt that success will come. The question ultimately probably will be, how do you scale it, right? I mean, if your test case is successful, which it will be, the next step is, how do you approach it nationally? Have you thought that through, or is it right now just let's just stay focused on the the pilot case and not get ahead of ourselves?
Yeah, I mean, we're thinking a little bit about how we scale this, but we do really want to look at the pilot and what can we learn, and how can we make any changes or tweaks. It's sort of our style here is we put it out and then revise and make it the best possible course it can be. So, we're thinking a little bit ahead, but really trying to make sure that we get, the content right and the grain size right. So, yeah.
Yeah, that's so how long does the pilot last, and when will you know the results?
Great question. So we want to leave it a bit open-ended, so it'll run a few months. We want to provide, some businesses will allow employees to do it during the workday, others may not. So we want to make sure that people have enough time, to finish the course. It depends on how it's administered. So we'll know in about 3 months or so what we're looking at. Hoping to also pilot a version of the course with college students who haven't had access to financial education. We've been getting calls from college students and actually some parents who have students in college who are looking for something. So we're excited about that as well.
Yeah, I mean, it's like you're going to need to expand your operation.
I know. This one almost put us over the edge, so we may have to get some more people.
Yeah, I know. How big is the staff today?
We've got a lot of part-timers too. I guess if you add it all up, it's about 9 people. So we're a fairly small shop. So
yeah, that's a lot to handle. And then you do all your development work when it comes to video and the programming. That's all done in-house, or does that all get kind of pushed out, outsourced to?
Yeah, it's all done. That's all done in-house. We do consult with a lot of experts outside of our small group, but everything else gets built in-house and coded and programmed and all of that. So it's a nice sort of group. We all communicate together and collaborate together. So it helps it makes it a little easier having it all together.
Yeah, and it's amazing because you're in a great university setting, and there are probably so many smart people. There are probably people who are like, I'd love to work on that project because it is so cutting edge and so different when you look at it compared to others, and probably different than what they're doing in their regular academic lives.
Yes, very much so. Very much so. Yeah, it's fun. I think it's fun for people to take that knowledge and apply it to real life situations, and how can this really have an impact on people across the country, for sure.
Yeah. Do you last question. Do you, we've got holiday season coming up. That means Black Friday. People going on Amazon. There's all these different deals. Have you thought about how to? I know you said it's not really a reactionary, like let's pay off debt, but have you built any of those timings into the education? So like, when you get Amazon dripping on you with, buy a new microphone for your podcast, that, you somehow find the intestinal fortitude and mettle to push away and delete it.
Yeah. So we actually talk a lot about, who influences your decisions. And then, kind of, what are your values? What sort of inputs are you taking in? And really that becomes part of, so you're really looking critically at those ads that are really geared, to tempt you. And we do a lot of talk around that, looking at, your own personal life and sort of finding that balance, striking that balance. So it's, we also do a lot with, smart purchasing decisions. Do you just buy it from here because the ad says it's on sale? And kind of, really looking at it practically, and is it the best decision? So, we don't specifically talk about Black Friday, but we do it in a general way.
Sure.
Where, they can apply that to all different types of situations.
Yeah, I remember Tara Falcone from would say, instead of it's the fear of missing out, it's the joy of missing out. Mm-hmm. And I feel that is an important concept that we should all be comfortable with, because we do not need to have the latest, greatest things. I don't need that new podcast microphone. But I think that's a good mindset to have. Rebecca, it's always a pleasure to talk to you. You guys are doing some great groundbreaking work. Wish you all the best on this latest trial with these small and medium businesses in and around Chicagoland. And I hope the teachers in Chicago get back to work and the students get back to school and they learn a little bit more history and also some financial literacy.
Me too. Thanks so much.
All
Appreciate
right.
it.
Take care. Have a great rest of the weekend.
You too. Bye-bye.
Bye. Welcome back, and very pleased now to be joined by the retirement reporter for Market Watch, Miss Alessandra Melito. Hi, Allie. How are you doing today?
Hi, I'm good. How are you?
Fine. Are we almost up to the pumpkin spice latte time period? Is that almost available at our local Starbucks?
It's been available since like August.
Is it
You
Starbucks
gotta
or
get on
Dunkin'?
that.
Is it Starbucks or
Both
Dunkin'?
of them. Well, Starbucks is the original pumpkin spice latte, and Dunkin', they don't do their pumpkin spice lattes. They do their pumpkin coffee, though. That's my
Okay.
favorite.
Well, I won't put you on the spot and ask you which one you like better, because we don't endorse anyone on this program. But I'm sure that your palate is very refined. That's all I'll say. So glad that we could connect. I know you're extremely busy with a lot of personal and professional things going on. What's top of mind for you this week and the folks over at Market Watch with respect to retirement?
So there was a little survey that came out from a home assistant company recently that suggested that people haven't started saving for their parents' old age. I just thought that was super interesting because so many people have trouble even thinking about their own retirements in old age. So to think that in their middle to later years they have to also think about their parents' older age and like pay for that, I was shocked by it.
Yeah, I mean, but that is actually good thinking, though, right? I mean, we in some way, shape, or form, if we have parents and they lived into their later years, we're going to have to do. Usually, I've seen my mother and father take care of my grandparents, and I would expect to do the same. For my parents.
Absolutely. So the survey basically said that more than half of people age 40 and older have not discussed aging with their parents, and that most of them, about 84%, have nothing saved for their parents' future should they end up needing that money in the future. So this came from a home care provider. They're the ones who have aides coming to homes and taking care of elderly patients and things like that. But it was still a very interesting, just an interesting sentiment. People do obviously want to help their parents in any way that they can. I've spoken with caregivers in the past who they're not, the wealthiest, but they do whatever they can to help their parents. So they'll help by paying for prescriptions that their parents can't afford, or they'll help with nursing facility expenses, things like that. But it would be nice if people could include that as a line item in their budget to save a little bit for that. I think what it comes down to first and foremost is having those conversations early. So not just with parents, but with siblings and other loved ones who might be assisting in some way. There are so many things that people need to talk about when their parents are starting to exhibit signs of aging, such as where to live. There are sometimes siblings who move far away and one's closer, so obviously they're going to shoulder more of the physical support. And then you have people who maybe they make a lot more than their brother or sister, and they would be doing more of the financial support. So it's good to have those conversations and be very open and honest.
Yeah.
Also,
go ahead. I'm sorry.
It's important to talk to your parents about what they expect from you. So you don't want to get to be 50, 60 years old and your parents are 80 or 90 and they're like, hey, so when are you going to start doing this for me or that for me? And you're not financially or physically or mentally prepared for that. So the sooner the better to having those conversations. You'll, deter from any potential family conflict, and you'll maybe even avoid hurt feelings.
Yep.
And you'll also be able to prepare financially for those sorts of caregiving needs.
Yeah, and we've talked about it before. In the old days, even before my time, parents lived with their children in yesteryear, and today that doesn't happen. Many people are disparate and spread all over the place, which I think is very interesting. But this is really important conversation to be had. Where, for example, is the will. Has the will been updated? Do you have a safety deposit box? What is in the safety deposit box? How do we get access to the safety deposit box? Those types of things need to be discussed in addition to what someone's wishes are, at end of life or to get care.
Yeah, absolutely. Yeah, there are so many things. So not only talking about expectations and just what people want out of their old age, but even talking about the things that they don't want to talk about. So like, okay, maybe you don't want to talk about the exact figures in an inheritance, but it's good to have an idea of, if there is going to be one, like, from the parent to the child's perspective, like talking to your kids about what not to expect or what to expect. Also, kids should be making sure that their older parents are, filling out those forms, those documents, so that they're not the ones making difficult decisions that might be against the parents' wishes. Power of attorney is important, and the healthcare proxy, all those sorts of documents. They're not the most fun to plan ahead of time, but like, who wants to think about like you being unconscious in the hospital? Like, that's obviously a very like dreadful thing to be thinking about, but at the same time, you don't want to get there and you're not the one who gets to make the final say. You're relying on a family member who maybe has a different idea of what your best interests are, or just doesn't know what your wishes are. So that's important. But going back to the finances, I think that's something that a lot of people said in the survey, they said that they were worried about their parents aging, and they said that they were also worried about the cost of care, especially in terms of a caregiver, because there are those instances where they can't physically be there for their parents if they have to work or if they don't live anywhere near their parents. And those costs add up. I mean, healthcare and retirement is one of the most important and most expensive costs in retirement, and it only gets more expensive as a person gets older. There's an annual study that comes out from Fidelity Investments that says that a 65-year-old couple retiring in 2019 can expect to spend $285,000 out of pocket for health care, and that is not including that is not including long-term care, right, which is extremely expensive and a whole other ballgame as far as like nursing facilities or having an aide in the house or any of the things that help you facilitate like day-to-day tasks.
Yeah, one thing that people fail to bring up is that we have an aging population. You look around the world, Japan, other places in this world have aging populations. They're not producing as many children as they did in the past for whatever reason. And obviously that is a generational thing. It can't be fixed overnight. But when you have that, then your reliance on public services like Medicare, Medicaid, can become challenged. And I know we've talked about that, you and I, and on the program before. So there's a lot there to unpack, and I feel like talking about retirement and savings is like sex and politics. It's in that same category where you don't want to go to a party and talk about your 401k allocation, or you don't want to talk about that you've got all your things buttoned up. But really, the earlier you start communicating, Allie, the better off you're going to be in the long term.
Yes, definitely.
Well, Allie, always a pleasure talking to you. Great story, and look forward to seeing and hearing more from you. Have a great weekend, and we will talk with you soon.
Great. Thank you so much.
Thanks, Al. Bye.
Yeah. Bye.
Welcome back. Now we're going to shift gears and talk a little bit about retirement legislation, what's going on Capitol Hill, and who to do it better than Groom Law's Legal Eagles. And I have one legal eagle with me today, Kevin Walsh. He's a principal with the Groom Law Group, an employee benefits firm. Hey, Kevin, how are you?
I'm doing well, Jeff. Thanks for having me on. With the Nats in the World Series, there's been a lot of excitement around D.C., and I think that's caused a pause on retirement legislation.
Yeah, it's amazing, isn't it? I mean, I would have picked, just looking at the pure statistics, the Astros, but it looks like the Nats have turned it on, so good for them. I'm sure, have you caught any games?
I have watched both of the games so far, and I'm still trying to get tickets to any of the games this weekend. But it's very exciting here in D.C. with getting wins against both of the Astros aces. there's a sense of optimism here in DC that could be crushed, or we could just be ecstatic by the next time we talk.
Yeah, well, as a long-standing Capitals fan, I can tell you I have experienced the agony of winning the first two games only to watch the Penguins and or the Rangers come back in least recent history. So I hope it goes the way you want it. So what's top of mind? We should also point out that David Levine is not available today. So Kevin is pulling full duty, as he is quite capable of. So Kevin, what's top of mind for you and the Eagles and Groom Law Group this week?
So this was a very exciting week in retirement. And the reason it's such an exciting week is that we've been talking for a while about there was this rule that was almost done, that was going to come out, that we thought was going to signal the shift from paper disclosures to electronic disclosure. But, we hedged our bets because we weren't sure how far the regulator would go.
Yep.
And the proposal came out this week. It was published in the Federal Register on October 23rd. And the name kind of tells you the whole story.
Okay.
The name is Default Electronic Disclosure by Employee Pension Benefit Plans under ERISA.
Seriously?
And the big thing here is it signals a shift.
Yep.
By creating a new safe harbor. The department is signaling that, that there's probably going to be a shift now from paper being the default to electronic being the default. And that's, I know there's a Coalition for Paper Alternatives, which has put comments in saying we need to stick with paper, but just about everybody else is really excited about some of the things that this shift might allow.
Yeah, that's absolutely amazing. And I saw the announcement by Assistant Secretary Rutledge, I guess, at the what was it?
At ASPA.
ASPA, right? So that's pretty amazing. I'm sure at least the industry is definitely cheering it, and looks like there'll be some cost savings both on the postage and I guess printing side, definitely, right?
There's the big savings on printing and postage, but also kind of big benefits for participants in the sense that, one topic I talk about just about every week is missing participants.
Yep.
And I think when you read through the proposal, you kind of get a sense that the department recognizes that email addresses and cell phone numbers might be a little bit stickier than kind of permanent home mailing address. And I mean, it's been true for me, and I think it's probably true for a lot of participants. I've had the same cell phone number since I was 15. I've had the same email address since I was 20, and I've changed my address, I don't know, 10 times in the past 20 years.
Yeah.
So,
I was going to say, I didn't have a cell phone. There weren't cell phones when I was 15, but that's a whole nother issue. I mean, obviously it's kind of keeping up with the times. Now, you said there were some folks, some coalition who were against. What's the main argument against this? That some people don't have addresses, don't have electronic abilities? Is that the issue here?
The main argument against is that people really like paper, and that some people don't have access to internet. But I think with the passage of time, those arguments diminish. If we think about the newspaper industry, I mean, they're one of the key proponents of why people like paper, and we're learning more and more that even people who read their news prefer getting it digitally. But kind of pivoting back to the rule, before I provide too much commentary on other industries, kind of the nice thing with this.
That's what I love about you. Anyway, go ahead.
It provides kind of a notice of availability, and then kind of one-stop shop is the way that they're doing this. And by that I mean you've got to initially provide people with a paper notice saying, we're going to give you future notices electronically unless you tell us you really want paper. And then we'll provide them for you for free on paper. But the idea is, at the outset, maybe at hire new employee orientation, you'll include as part of their packet, our default way of giving you retirement stuff is electronically. And then they've also kind of thought through the idea is that you'll post your notices to a website that they can log into. Mm-hmm. The cool thing that they've done, and this is actually, I think, was kind of more ambitious than we initially thought, is from there on out for kind of routine notices, so kind of notices you get every year or notices that you get due to simply the passage of time, DOL has proposed that, annually you send that individual an email or whatever your electronic way of communicating with them is, a notice reminding them that they can get all those documents at one website. And then they would be able to log in, and on that website, they'd see kind of all the documents regardless of when they got updated.
Right.
The nice thing here is that, I mean, much like I've joked that I don't open all of my mail, if you send me too many emails, I am less likely to interact with them.
That's
so
true.
if a plan sponsor sends one notice each year saying, it's been a year since we've reminded you to check your notices, we've updated a handful of documents since then, probably makes sense to check them out. You could see there being kind of a higher uptake and checking them at that point. The other nice thing about this is that if you get a mail copy, a paper copy, and you throw it out, you no longer have the document. But if it's up there on a website where you just log in, you can see it, you don't need to print it unless you want to, kind of those disclosures will be in one spot. And that could be a big help to participants and beneficiaries who may or may not have created a filing system for all of their plan disclosures.
Yeah, it's almost like a online. It's like the cloud, right? It's like an online account that you can print off what you need. And I just said it. If you want to print it off, you're free to do so. You just have to. You can go to a public library, and make sure that you're on a very safe network. But you can print off these pieces if you prefer paper.
So the rule doesn't cover health plans, but that's one of the areas where the department's asked for comments. So it's a pretty big deal in the retirement space, and it provides an opening for kind of some discussion of what we should do in health. We'll probably track this more in the coming weeks because the comment period closes kind of the week before Thanksgiving in November. We'll keep an eye on the comments. The sense that I have talking to people is that both participants, sponsors, and service providers like this rule. But as people post comments, as people submit comments, we'll get a better sense of where everyone stands. But for now, this is a huge deal in the retirement space because it signals that we might finally be making the digital jump.
Yeah, 20 years after it started, but nonetheless, congratulations. It's a big step, and who knows what door this opens, Kevin. Does it help? Certainly probably does help your missing participant initiative, which I know you love talking about. Any news on that front while we have you?
So on that front, we haven't really had too much movement. I think there's still a sense that people are hoping that in response to the executive orders that came out a few weeks ago directing agencies to avoid unfair surprise, that EBSA will pivot from enforcement in this area to providing guidance. Mm-hmm. So I think that's the hope. But everybody has the same idea. Everyone wants to pay benefits. It just comes down to figuring out what the most effective way of finding people or what you're supposed to do for those that just can't be found.
Right. Absolutely.
But kind of the big takeaway this week is that this proposed rule came out. If it's finalized, it could be a big deal.
Absolutely. So we'll look to get more information on that. And when are all the comments due? And then they have to be digested, right, and responded to?
November 22nd.
Okay. And then they get responded to formally?
And then we'll see a final rule at some point with the preamble addressing many of the comments.
Awesome.
Mm-hmm. So the DOL has an opportunity to kind of improve upon the rule based on the comments or go in a different direction based on the comments.
Yeah, excellent. Well, Kevin, always great talking with you, and appreciate you making time for us in your very busy life and professional schedule. I know you and David travel quite a bit and are always on the clock. So thanks for making some time for us, and we'll see you next week and possibly get you back on the network shortly too.
Sounds great. Thanks for having me on, Jeff.
Take care, buddy.
Have a great weekend.
You too.
Bye.
Go Nats. Bye. Well, folks, this wraps up this episode of BRN Sunday. Hope you enjoyed it, and if you just found us, come on back. It's a weekly show. We've got some great contributors, and we always take on and analyze the news in a fair and balanced, unbiased way. So until next week, enjoy your weekend, enjoy your week, and we'll talk to you soon right here on BRN Sunday.